Hello guys, welcome back to the Lumley trading video. In this one we are going to be looking and doing some in-depth stock analysis, technical analysis over on AMC. So last night they did, or after hours, they did have their earnings on the release. Did actually kind of temporarily push up, which was quite surprising considering, you know, they did kind of another lost quarter. But since then obviously pulled back, opened up, gapped down, and we kind of continue this gapping down now, being down over 8% as we're recording this video. So what are key levels I'm paying attention to, both support and resistances over on AMC? So from a support side, really the only key levels I'm paying attention to is going to be around 288 to 337. Reason for this is statistical mean on both the 6 month and the 1 year. Again, 6 month is on the left chart, 1 year on the right. And between this area, this is what is considered a fair value. So if I'm trading, and like we said, this is technical analysis. If I'm looking at technical analysis, I don't want to be trading when a stock's at fair value, because then to me, there is no trading edge. So when within that range, I'm not looking to trade, but it can be used as a target. So if you're more short bias, and I'll go through why I'm a bit more short bias as of right now, this would kind of be my target. But again, I'm not really hitting any longs on this stock below the value of $8. So that would be my only support level and what I'd be paying attention to. If you wanted more, obviously it can just be key psychological levels. So, you know, the $5 whole dollar is going to probably be significant. And then if you go below that, you know, you're going to have the $2.50, the $2, and so on. And obviously be paying attention to the 52-week low. But really where the stocks like these and most of these small caps really start to shine is I think when they come up to their deviations to the upside. So we can see on AMC, we have our first deviation over on the 6 month at $7.80. And then after that, we have our next one at $9. So how are these levels used and how do I look to trade them? So if we quickly go on to say 5-day, 1 minute, just so we can kind of see this chart. What we can see is coming to this level, again, this was used as a target if we're going long. And then what we can see is we came to this level, and this is where I start going short bias. And the reason for that is I know coming into this level at a minimum, I really expect a pullback. But really overall, this can be a reversal level as well. So minimum, I look for a pullback, but really there can be a reversal as well. So knowing that, again, I'll tend to trade these through options, and the reason for that is I can then know a specific amount of risk that I'm taking on the trade, and then I don't have to time it as perfectly. Obviously, if you're trading this, you're getting short shares as you come into this level. You know, you would have been offside quite a bit and potentially taken, or most likely hit a stop, especially if it was a day trade. Whereas if I'm hitting this with options, again, through credit or debit spreads, or even just outright puts, depending on the premiums, then what I can do is kind of catch this level, get short at 780. And even the next day when it went to 850, that wouldn't have been a problem. Because again, I know what my defined risk is. I know as long as coming into the close of those options, if we're below that 780, I will profit in the money. And what's happened? Okay, cool. We hit that level. We stayed up there, you know, for about an hour of the close the day before and about, 2 hours of the open. Then we came below it, and then since then really stayed below. So that all that would have meant is, it came into this level. We can profit as soon as it goes below, which would be right now. And again, we had a defined risk going into it, and it's usually a one-to-one risk to reward. And I know the probability of it going below 780 is greater than it staying above 780. So it's really how I look at these small caps. AMC is not being the only one, any of them, Bed Bath & Beyond, AMC, GameStop, all of them, really I trade the same way. Now, obviously, holding that short, if I'm holding outright puts, obviously I would have been locking in some profits now because we are down quite a significant amount. But what would be my overall target and then potentially hold some size too is around kind of this, $3-4 level. But again, obviously, you're going to want to be locking in profits along the way just because it is such a far way off. Now, if we come back and kind of continue to the upside, $9 is going to be that same level. And again, all I'm looking for is that same thing. Coming into this level, at a minimum, I expect a pullback. Then, again, I'll lock in some profits as soon as you get a pullback. Like now, this could only be a pullback. If so, that's why I'm locking in some profits, moving my stop to break even. If it continues down, cool. The rest of that position we're holding, we're going to be making more money on. If it comes up, we can stop at the rest of, break even, and we still make quite a good profitable trade. So that's really the same exact plan I'll be looking at coming into the $9. If we break that, then I'm looking at the exact same plan going into $12.75, $14.75, going up to $17.75, and final levels taking us all the way out to $20, $22.50, and $26. Anyway, that is the breakdown over on AMC. If you enjoyed the video, why not drop a like and subscribe? Did you hold or trade any of this for earnings? If so, let me know in the comments. Otherwise, I hope to see you in the next one, and check out this analysis video.